Welcome to Kitco News. I'm David Lin. We're at the Xplor Mining Convention in Montreal, Canada. And joining us today is John Kaiser of Kaiser Research Online. Thank you, John, for coming on the show. Well, you're welcome back. You've been on the show before.
Thank you, David, for having me on Kitco here in Montreal.
It's our pleasure. So we've had you back on in March. Back then, prices were hovering around, gold prices were around $1,300 an ounce. It's up $200 now, around $1,500. And back in March, you've mentioned that there would be an inflection point around that level and you would see a subtle uptrend, but the uptrend wasn't so subtle. So how do you feel about the momentum we've had? Was the rally almost too much?
Well, in 2016, we had what thought was a turnaround in the resource sector, and gold ran to 1,400 or so. And for me, breaching that previous high, that post-2011 high, that was supposed to be an important trigger, and yet we got to almost 1,550. We're hovering around 1,500 right now, and yet the interest in the resource sector has been relatively subdued, and even the talk and hype about gold is still very subdued. So that inflection point that I expected, it has not materialized.
It hasn't. So you don't think we're at another inflection point downward at current levels yet?
I do not see the reasons for gold to retreat. Back in 2009, the whole gold argument was about inflation, fiat currency debasement in the wake of the financial crisis and the money printing. All the hand-wringing about money printing turned out to be unfounded. Inflation is still below 2%. So the traditional gold bug argument doesn't have any traction right now. I think it's more like in the 70s when gold was unleashed from its $35 fixed price, and it hit $850 in 1980 before eventually settling at $400. That was a very substantial real price gain, a 400% real price gain. And it was triggered to a large degree by the sense that the United States was losing it as sort of the biggest power in the world. OPEC was taking the boots to them, that Tehran hostage taking, and the Iranian Revolution was a huge problem. The Soviet invasion of Afghanistan on Christmas Eve of 1979, all of that made it look like America was falling away. And this was, of course, post-Vietnam also. And so the rise in gold was uncertainty about where's the world going without American leadership? And inflation at the time was 10-12%. We don't have that inflation now, but we have again a sense of loss of American leadership, of deliberate forfeiture of this example role to keep everybody in line. And the reason for gold to reprice into the $2,000 to $3,000 range is linked to this uncertainty just growing and growing. And what will be the trigger that suddenly makes people say, Humpty Dumpty has fallen off the wall and nothing will ever put him together again, and then start buying gold because there is no alternative really to the US dollar in terms of euro, ruble, won, or anything like that. That's when gold becomes this lifeboat, this safe haven that everybody piles in, assuming they don't think Bitcoin is a safer haven.
I'm glad you brought up Bitcoin. We'll get to that in a second. But just going back to your point about the macro landscape here. So, I mean, we've seen a $200 rally this summer. Do you think anything substantial or fundamental has shifted in the macro landscape? Or do you think, like you said, there should be another catalyst we're looking for? Like, what parallels can you draw to the 70s?
Well, the 70s ended up becoming the beginning of globalization with the Reagan-Thatcher revolution. And what's happening now is the ungluing of globalized free trade as a concept. We have now these trade wars dominating the scene. And with America's retreat into itself, saying it's all just about us, make America great again, we don't care about any of you guys, that's giving up the subtle role that they cultivated after World War II, where even though they looked like they were at the losing end of many transactions, they were in fact gaining in many other ways. And that is the big change that's happening now. And so countries like China, they can't stop. They have to keep growing and growing. They can't step down and say, we're not going to try and achieve equality in terms of technology and even military capacity in the long run. So this is a clash that's different. It's like the old Soviet one, except this one, it's hybrid capitalism. It's communist, capitalist together, run by a giant state actor. Whereas with the communists, with the Soviet Union, were in charge. There was no free enterprise dimension to it. So we're dealing with a completely different reality now than in the 70s, but still this destabilizing of the status quo assumptions. This is what's underway. This is the important thing to focus on. And at today's gold price, all the gold that exists is only worth $9 trillion. And we've got $15 to $17 trillion that were not too long ago yielding negative, meaning that when it matures, you get back less than you actually paid for it. And that's a market for gold to grab part of down the road as this uncertainty escalates completely out of control.
So offline, we were speaking earlier, and you mentioned how Bitcoin is tied into gold and perhaps has drawn capital away from the gold sector. How do you see this playing out now? And a lot of the audience, so to speak, of Bitcoin has been millennials, people under 40. How do you think that crowd would affect the gold market going into the future?
Well, gold is what I call stored energy, because to bring it into concentrated above ground existence, you need to mine it from its dispersed form in the ground and create a bullion brick. And then all that energy and work required to do that, it's there. The gold is there. Bitcoin is an artificial reality which to sustain costs ever more energy going forward. And whatever title you claim to have to Bitcoin, if the computers all get their plug pulled on them because of some electricity crisis or who knows what government action, all your wealth in Bitcoin, it basically evaporates. And somewhere along the way, millennials will tire of the simple momentum game, the greater fool's spiral game that Bitcoin is, and they'll start seeing that gold is a better place to store wealth and perhaps even increase that wealth. And it's the idea of a real price increase in gold that's so important. Gold going to, from $400 to its current level, $1,500. Well, if you inflation adjusted from $400 in 1980, it's $1,251 today. Whoop-de-doo. If you live in the United States, you have with federal and state collectible capital gains tax, you're going to lose 40% of that gain. So that was really clever hedging against inflation by owning gold. Not so at all. But a real price increase, that's substantial. And that's what's important for the gold, the resource junior sector, because it's the real price gain. Gold going to 2,000 to 3,000, that's maybe 50% to 100% gain. That's not that fantastic. But the leverage that's implied for ounces in the ground that don't work at sort of $1,400, $1,500 gold, that's where the 10, the 20, the 50 baggers come into play. And my hope is that the millennials will discover that, gold is the first step, but then speculating in the resource junior sector, rather than just momentum trades like cannabis or Bitcoin, that's the next stage for them.
So do you think millennials will be the next generation for the gold market in terms of investors?
It has to be, because the brokerage industry has this suitability rule for people age 55 and over, where they don't even want to accept my unsolicited order to buy, a resource junior penny stock. So I have to go through a discount broker and basically be on myself. And the millennials, they're the next generation, and the Generation Xers, which are in between. That group doesn't really know anything about the junior resource sector. People, my generation, the boomers, and then the retirees, the post-war people, we know all about this, but we are also slowly riding into the sunset. And yes, it's absolutely critical that millennials and Generations Xers discovered junior resource sector speculation for this sector to survive. Otherwise, this ecosystem completely falls away.
Right. Well, great thoughts, John, and thank you for coming back on the show. I hope you enjoy the rest of your conference. And thank you for watching Kitco News. We'll be back with more coverage, so stay tuned.